Yo guys, welcome to another video. If you are new to the channel, my name is Ballo.trades and I document my journey to becoming a successful forex trader here on YouTube. So I would appreciate it if you guys smash that like button, smash that subscribe button, and click on the notification bell to get notified when I drop another video. And I would really appreciate it, guys, if you follow my Instagram. I'll pop the link in the description and I'll make sure you follow me, guys. So yeah man, let's get to the point of the video. So I want to start doing this kind of videos more often, so concluding this whole week. So I took a total of 3 trades, but then I still consider the 4th trade, even though I wasn't executed on it, but I still consider it because it was part of my plan. But then I'll explain later on that further in the video. So guys, before we get into the video, guys, if you're looking to purchase a new PropFirm account but don't really know what PropFirm you should use, I suggest to use a very helpful platform called PropFirm Match. What this platform basically does is just connects you with reliable, safe, and cheap prop firms you could use. So the links will also be in the descriptions, and coupon codes are also available in the platform. So yeah man, if you're interested in that, the links will be also in the description. So without any further waste of time, let's just get into the video. Okay guys, so here we are on my trading journal. As you can see, this week we totaled 4 trades, but this last one I wasn't executed on it on my broker just because of spreads and whatnot, but then it was still valid. I could have taken it if it was on a PropFirm account, so I still included it even though I wasn't executed on it. It was just the trade idea in general. So before we get into my trades, I just want to show you guys my trading plan and my trading rules. So all that you see over here basically sums up every trading plan that I basically have, right? So let's just start off with the trading rules that I do have. So my trading rules are basically 4 in essence. So the first one is I only take 2 trades. Let me just say this: 2 trades at a time. So what do I mean by this is that I only execute 2 trades at a time. I don't want to see more than 2 positions running on my MetaTrader, because for me, that's if there's any other trades going on more than 2, it just frustrates me, I'm not gonna lie. So I just keep it at 2 trades a day, right? I mean, not a day, but at a time, right? So risk 0.5%. The second one is risk up 0.5% when in -2% drawdown. So this one is self-explanatory. I reduce my risk when I'm in -2% drawdown, right? Hope that makes sense. Then the third one is risk 1.5% when in 4% profit. So I increase my risk once I have a 4% buffer. Now, as you can see, there's a star next to it. What this means is that this is optional, right? This is not monetary for me to do. This is not a must. This is not compulsory for me to do, right? So if I feel like my confidence is up and my trades are appearing as 8+ setups, then I'm probably going to do this. But then this is not this is optional. This is not a must for me to do, right? Then the last trading rule that I have is basically risk 0.5% when trading correlated pairs. So what do I mean by this is when I'm trading 2 pairs that are correlated with each other, I risk 0.5% on each, so which sums up to 1% in general, because it's basically entering on the same idea. So why would I risk 1% on this one and 1% on the other? If I risk like that and it happens that one trade hits stop loss, it also means eventually also the other one is going to eventually hit the 1% stop loss. So I'll be 2% down on a single trade idea. For me, that does not make any sense. So what I try to do is I try to risk 0.5 on each, so that when both trades, which is the same idea, hit stop loss, I could eventually lose like 1%, which is proper, right? So that sums up my whole trading rules. Then moving on to my checklist, right? So my checklist, I check this from the highest to the lowest when I'm about to enter a trade. So there's only 4 checklists that I primarily look for, right? So the first one is look for higher time frame alignment. Now, as I said in my previous video, if you haven't watched my previous video, guys, I suggest that you do so. Higher time frame alignment, I only use this when I enter a trade on the 15-minute time frame, which is my lower time frame, right? Which I barely do, to be honest. And like I said in the last video, I'm diving more into swing trading, so I barely use the 15-minute time frame, right? So but I still have this here in case I trade on the 15-minute time frame, right? So this is valid for the 15-minute, right? High time frame alignment. When it's there, I just check it off, right? The second one is liquidity sweep. Now this one also is also not compulsory. Like these two, the first two, high time frame alignment and liquidity sweep, these two are negotiable, right? It's not a must for me to have, but then it would be nice to have it, but it's not a must for me to have it. If I have it, then it's a bonus confluence, but then I just don't have to have it, you know. And in this case, a liquidity sweep, I only look for liquidity sweeps when I'm looking for like a trend trade reversal. When when the market is in an uptrend, then I'm looking for a short position, or when a short position appears, it's good for me to see a liquidity sweep. So this only applies when I'm looking for a market reversal trade, right? So these first two are both negotiable, right? Now the ones that I cannot negotiate is the last two, a clear break of structure. Now the keyword is clear break of structure. Let me just highlight this. The keyword for me is clear break of structure, and really need to see a clear break of structure and also an imbalance within that break of structure, basically the range, right, of the break of structure. So if this doesn't appear, then I'm not gonna even look to set up my fib tool to enter a trade. I'm not even gonna stare at the trade. I'm not even gonna think about it. I'm just not gonna trade that particular pair, right? So this one is very compulsory for me to do. Then the last one I have on my checklist is a 0.71% retracement. So I enter off of 1 Fibonacci level, which means my risk to reward ratio at all times is very constant. It's fixed. So my constant risk to reward ratio is 2.45, right? That is my constant and fixed risk to reward ratio, right? No matter in an uptrend, no matter in a downtrend, no matter the time frame, my risk to reward ratio will always be constant, right? Because I just take the low of the range and the high of the range, I just enter off the 71%. Now with that being said, let's just go into the point of this video, right? The first trade that I took was actually on Monday, the 31st of March, right? The last day of March, which was on a trade on Euro USD. So let's just hop in it. So I took this on the 31st of March, as you could see. Then I closed the trade on like two and a half days later, right? So the imbalance was available, which I checked this off. Like I said, this has to be there. The imbalance has to be there, right? High time frame. As I said, this was a 4-hour trade, so the high time frame didn't have to be there, right? Then the Fibonacci tool was 0.1, which was there, and as you can see, the trade type was a swing trade, not a day trade, but a swing trade, right? Then the result was a profit. Here's a screenshot of a trade before. So what basically happened here, as you can see, there's a clear break of structure. For me, this is very clear, but even though it could be better, but this is clear for me, right? Then the break of structure left an imbalance, as you can see, which is what I look for. Then I waited for price to retrace, then I entered off of the 0.71 level, then my stop loss at the low. So if my stop loss was to be hit, then I know that this was basically a liquidity sweep, or I was wrong about the trade in general. You know what I'm saying? So this was the trade before, and this was the trade after. I got tapped in, right? Price went into my favor, then it came back, went back to my entry level. At this point, the trade is still valid, right? So I just had to stay patient, but the trade was still valid, right? We consolidated for a bit until momentum kicked in, then hit TP, right? So that was that. Euro USD, I popped the screenshot on the screen. Euro USD trade. The second day, which was on Tuesday, the 1st of April, took a trade on Euro AUD, right? So this one, I took it on the 1st of April and I closed it the next day. Well, closed me out on the next day, right? Imbalance was present, the higher time frame bias. This was a 4-hour trade, so yeah, fib level 0.71, trade type was a swing trade, profit hit, right? Now as you can see, clear break of structure, an imbalance left, so I took the range from the low to the high, then I drew my Fibonacci tool, right? Now given that this one came deeply into drawdown, which is what I don't want to see, but then it happened, there's nothing I can do. I still got in the trade, right? We got deep into drawdown, right? But this was still valid until it broke this level down here, right? So as time went by, as you can see, so this is a trade, a screenshot of the trade after. As you can see, from that point we went up aggressively. As you can see, momentum also kicked in, and this was a TP hit. Now the last trade that I took for this week was on Wednesday, right, which was GJ. Now GJ, I took it on the 1st of April. Okay, I closed it, I think it was yesterday, yeah. So I'm just gonna tap this in, yeah, yesterday, so which was like a day of price action, right? Now we had that imbalance present, the fib level was on 0.71, this was a swing trade and this was a profit, right? As you can see, now as you can see the screenshot before, this was where I was tapped in, as you can see. Then we had imbalance, clear break of structure, then a retracement back to the 0.71%. And yeah, for this I was in this trade. I don't have a screenshot of after the trade, let me just look for it. Okay, so now this is the screenshot after I took it. The wick that you see here, guys, this was, I don't know, when Trump was saying some tariff stuff, so this actually caused a spike in the market. But as you can see, the trade was still valid and we actually ended up hitting TP on this one. So yeah, that was my last trade for this week. And let me just show you guys this one, right? USDJPY. Now USDJPY, the problem I have with USDJPY, as you can see by this screenshot, guys. Okay guys, so on USDJPY, I'm gonna just show you on my chart because my Notion is having hard times loading, right? So this was the trade idea, right? There was an imbalance right there, a break of structure, a very convincing break of structure, right? We targeted 0.71%, right? As you can see here, I was tapped in on my MetaTrader. I mean, not my MetaTrader, my trading view, but then somehow on my MetaTrader I wasn't tapped in. So this was the trade that I would have taken if the spreads were at the right place, but then given that that didn't happen, it is what it is. We move on, you know what I'm saying? So yeah man, that was basically a sum up of my trading week so far. So yeah man, I'm going to start doing this more often, guys. And yeah man, hope you like this video. Subscribe, comment, share with your friends, and yeah man, hope you guys enjoy the rest of your week. Cheers.